Hello traders, Gary Wagner here. It is currently 12:40 in Honolulu, 5:40 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 9th day of December, 2022, and this is the daily report for gold and silver. This has been a most interesting week in terms of how gold traded. It traded to its highest value on Monday, creating a double top after achieving a high of approximately $1,823. But Monday's complete story is that it had a dramatic and sharp sell-off going through the 200-day moving average, which is currently right around $1,800 per ounce and actually closing just above $1,780. As I said in the opening letter, it clawed its way back up throughout the week, and by Friday, it opened at the 200-day moving average, the low being $1,800.10, and trading higher for the remainder of the trading session. Gold, basis the most active February contract, is currently fixed at $1,809.40, a net gain of $7.90 or 0.44%. It was running against the current of very fractional dollar strength, but strength nonetheless. The dollar gained 0.15%, and the dollar index is currently fixed at 104.91. Lastly, silver futures had a nice gain today, just shy of 2%, gaining 1.87%, with the most active March contract of silver futures gaining 43 cents and closing at $23.68. There will be two key fundamental events next week that will shape and define the future direction of gold pricing. Both of these events will begin on Tuesday with the release of the most current inflation data vis-a-vis the CPI inflation index for the month of November, and then the conclusion of the last FOMC meeting of the year on Wednesday, when the Federal Reserve announces its last rate hike for this year. That being said, we're reviewing these technical indicators in order to give traders some insight into critical levels of support and resistance. This first chart is a daily candlestick chart of the continuous contract of gold futures. As you can see on the left-hand side of the screen is that the first time gold broke below its 200-day moving average over the last 6 months occurred on June 17th. It is this long red candle right here. And at that point, pricing stayed well below the 200-day moving average throughout the remainder of this time period up until Thursday of last week. That is this large green candle here. On Friday, prices opened and closed, even though it closed lower, above the 200-day moving average. That all changed on Monday of this week, which we described during the price board, in which we saw a dramatic fall from grace, with gold moving from 1823 to a low just above 1820. For the remainder of the week, gold pricing clawed its way back up from these lows of Monday and Tuesday, back up to a level above the 200-day moving average yesterday, and solidly above that today. The question becomes whether or not the 200-day moving average will serve as a level of support or resistance. And as I said in our opening letter, that will be based upon what the Federal Reserve says when it concludes next Wednesday's meeting. The last chart I want to look at on today's weekend review is a weekly Japanese candlestick chart of the continuous contract of gold to illustrate that the high this week is equal to a high that we identified during the week of August the 8th, when gold prices also hit this apex. While we can correctly identify this formation as a double top, in terms of it being a rounding bottom pattern, we would have really liked to see the highs of the two candles in the middle fall below the baseline of those candles before and after it. A break above the neckline would signal a continuation of the upside trend. This has been Gary Wagner, wishing you as always good trading. We will talk to you on Monday for the next daily update and review. Bye-bye.